When I say economic crisis, what's the first word that pops into your head? For most of us, right? It's fear. But what if that's only half the story? Today, we're going to dig into what history can teach us about a downturn, not just how to survive it, but how to spot the incredible opportunities they always seem to create. All right, so let's just rip the Band-Aid off and look at the numbers that have everyone feeling a little bit on edge. This is the stuff that's really defining the economic mood right now. First up, U.S. inflation. We're talking 8.5%, which is a jaw-dropping 40-year high. And look, this isn't just a headline. This is the reason your grocery bill feels insane and why rent keeps climbing. It's putting a real squeeze on everybody's wallet.
And that pain is especially obvious at the gas station. Fuel costs have absolutely skyrocketed, up 48% compared to this time last year. That's a massive leap. And it doesn't just hurt you when you fill up your tank, it drives up the cost of basically everything that gets shipped on a truck.
And you can definitely see all this turmoil in the stock market. The S&P 500, the one that tracks the 500 biggest U.S. companies, it's down over 18%. The NASDAQ, which is packed with tech stocks, has dropped even more, over 26%. But what's really telling are the giants. Netflix is down over 62%, and Meta, Facebook's parent company, has lost more than half its value. It just shows you that even the most powerful companies are feeling a ton of pressure.
And for anybody in the crypto space, well, it has been a brutal ride. Bitcoin's value has plunged by nearly 60% just since the beginning of the year. It really shows that no corner of the financial world is totally safe right now.
With numbers like these, it's so easy to think, wow, this is it. This time is different. But to really get a handle on where we might be going, you have to look back.
Sir Winston Churchill really nailed it with this one. History is kind of like a map. It doesn't give you a perfect prediction of the future, of course, but it shows you the patterns, and those patterns are just incredibly valuable.
And this table really brings that idea to life. When you look at the biggest market crashes in American history, you see a huge variety. You have the super short, sharp shocks like the COVID crash that was basically over in 33 days. And then you have the Great Depression, which saw the market fall an almost unbelievable 89% over nearly 3 years. The main takeaway here is that really bad downturns, while they feel awful, are a recurring part of the economic story.
So you look at a chart like that, and the first reaction is anxiety, right? But is fear the only lesson we're supposed to learn here? Or is there something else hiding in all this data?
So let's flip the script and look at what happens before the crash, because every crisis has a backstory, and that story is often just as important as the fall itself.
Now, this is fascinating. Before the 3 most recent big crashes, the economy went through these incredibly long periods of good times. I mean, we're talking 128 months. That's almost 11 years of a bull market before the COVID crash, over 9 years before the dot-com bubble popped, and more than 6 years before the Great Recession. So the really crucial point here is that these downturns don't just happen out of the blue. They are corrections that come after long, sometimes overheated periods of growth. This isn't just random chaos, it's a cycle. And understanding that it's a cycle is what lets us change our thinking from fear to focus. Because these moments of crisis have, historically, been incredible moments of creation. As the entrepreneur Patrick Bet-David says, a bull market, a rising market can make anybody look like a genius. It's easy to make money when everything is going up, but a bear market, a downturn, that's the ultimate test. The success stories that come out of those times aren't based on luck. They are forged in fire. They're the real deal.
And history is absolutely full of proof. Hewlett-Packard was founded during the Great Depression. Microsoft got started during the crazy oil crisis of the 70s. And more recently, giants you know well, like Uber and Airbnb, were literally born from the ashes of the 2008 financial crisis. These companies didn't just survive, they thrived because they solved problems that became even more important during tough times, like the need for cheaper tech or new ways to make some extra cash.
So let's put all the pieces together. What is the fundamental pattern that history keeps showing us about these moments of both economic pain and amazing potential? It's a pretty clear 5-step cycle that just repeats itself. It starts with step 1, the boom, a long period of growth. Then comes step 2, the crash, when it all comes to a halt. This leads to step 3, the test, which is a period of economic pain and challenge. But, and this is the important part, this is followed by step 4, innovation. New leaders and new companies emerge with better ideas. And finally, step 5, all that innovation is what starts the next big cycle of new growth.
And this right here is the single most important thing to remember. Yes, these times are tough, and the fear is real, but they are also temporary. Every single major downturn in history has ended, and every single one has paved the way for a new era of growth led by new thinkers and brand new companies.
So that leaves us with the ultimate question, doesn't it? The historical pattern is clear. Crisis leads to creation. Old ways of doing things get disrupted, and new leaders rise up. So as we make our way through the uncertainty of today, the real question isn't if there will be new winners, it's who are they going to be.